Most newer commercial real estate investors are completely winging it, and it's costing them millions. If you're out there scrolling LoopNet, talking to brokers, or walking properties without a defined buy box, you're not investing. You're just gambling. I know that sounds harsh, but I've seen it happen too many times. Smart, motivated investors diving into commercial real estate with no clear filter, no criteria, and no roadmap. And then they wonder why they end up in a cash-eating office building or an empty retail center. But here's the thing, this isn't about intelligence or hustle. It's about having the right foundation before you spend a dollar, tour a space, or even run a cap rate. In this video, I'm going to walk you through my Accelerator Buybox Framework, the same tool that I teach in my program to help you get laser focused on what the right deal looks like for you. And by the end, you'll have total clarity on what to buy, where to look, and what returns to aim for, and what to avoid like the plague. If you're serious about commercial real estate, don't wing it. Let's build your buy box right now. I'm Tyler Cobble. I'm a commercial real estate investor, and I've been at it for over 12 years now, and I've helped hundreds of people move from residential real estate investing over to commercial real estate with my CRE Accelerator Mastermind program. You can learn more about that in the link below. Before you ever underwrite a deal, tour a property, or talk to a lender, you need one thing: clarity. Clarity about what you're actually trying to buy and why. That's where the Accelerator Buybox Framework comes in. This framework gives you the guardrails to make smart, fast decisions so that you stop wasting time on deals that don't fit you. So here's how it works. Step 1, investor identity. The first question you need to answer is, who am I as an investor? What is that, Zoolander?
Who am I?
Are you looking for stable mailbox money cash flow, or are you hunting for long-term equity and appreciation? Are you an operator who needs to be hands-on, or are you trying to build something a little more passive? You can't build a portfolio that fits your life if you don't know what role you actually want to play as an investor. Step 2, asset class clarity. What type of commercial property are you focused on? Multifamily, office, industrial, retail, mixed use. They all have different tenants, financing structures, risk profiles, and operational needs. This is where a lot of new investors go wrong. They chase whatever's trending instead of locking in on what actually fits their skills, their time, and their goals. Avoid the shiny object syndrome and ask yourself, what asset class aligns with the lifestyle and the outcomes that you're trying to build? Step 3, market focus. Look at your geography. You don't want to be looking at deals in 5 different cities. Pick 1 to 2 markets that you can deeply understand. That means knowing the job drivers, the population trends, inventory pipelines, and even zoning quirks. Local knowledge gives you an edge and helps you move fast when the right deal shows up. Step 4, financial filters. Now this is where we get into the numbers. You need to define your minimum acceptable metrics before you look at a single offering memorandum. That means your minimum cash-on-cash return, your targeted cap rate range, acceptable loan terms, risk tolerance on vacancy and rollover. Because if you don't define your floor, brokers and sellers will gladly do it for you, and I promise it won't work out as well as you hope. Step 5, operational boundaries. And this is last but not least, but how involved do you actually want to be? Are you ready to manage tenants and handle repairs, or are you looking for a triple net lease that basically runs itself? Do you want value add, stabilized, ground up development? Your buy box isn't just a filter for deals. It's a filter for how your life looks too once you own them. So that's the Accelerator Buybox Framework. 5 questions that give you total clarity and keep you from wasting months or hundreds of thousands of dollars on the wrong opportunity. Now, I'm going to show you how to actually apply this in real time so you can use it to screen deals this week. Let's say you're an investor named Matt. Matt is in his early 40s, has a few single-family rentals under his belt, and he's ready to level up into commercial real estate. He's working full-time, but wants to build a strong, cash-flowing portfolio to eventually exit his W-2. So how would Matt go about building his buy box? Let's start with the investor identity. Matt wants steady, predictable cash flow, but he's not looking to quit his job tomorrow and become a full-time property manager. He's probably willing to be hands-on for a few hours a week, but wants something lower drama. So we define Matt's investor identity as cash flow focused, risk aware, semi-passive investor, building long-term wealth. Then we move on to asset class clarity. Matt doesn't want to deal with tenants calling about toilets every weekend. He's already done that with residential. He's also not interested in office right now. It feels too uncertain post-COVID. He's leaning towards small bay industrial, flex space. It's lower maintenance. You also get long-term tenants. He also likes retail strip centers with triple net leases. So now we've narrowed the asset type, and that alone cuts 80% of the listings off the table. Then we get to our market focus. Matt lives in Charlotte, North Carolina. It's growing, it's business friendly, and he knows the area really well. So we lock in the Charlotte MSA as his primary market with a secondary look at surrounding cities within a 1-hour drive. That's his competitive advantage, local knowledge and boots on the ground. Then we get to our financial filters. We have to determine his deal metrics. We come up with a minimum cash-on-cash return of 8%, a target cap rate of 7 to 8%. Now that's stabilized, so that doesn't mean that he needs to buy it at that. A price range of probably 1 to 1.5 million, based on how much cash he has, with a loan structure of 75% loan to value, fixed rate preferred, max vacancy on the property 15%. Again, he doesn't want too much to deal with. We don't want any major structural issues or full gut rehabs. These filters become an automatic no system for Matt. If a deal doesn't meet these criteria, it's out. And then operational boundaries, last but not least, Matt doesn't want to manage tenants or coordinate repairs. So he's only looking at properties with either triple net leases or room in the deal to budget for third-party property management. He's also avoiding value-add projects that have big capital expenditures up front. So let's recap Matt's buy box. Small bay industrial or triple net retail assets in the Charlotte MSA between $1 to $1.5 million at an 8% cash-on-cash return or 7 to 8% cap rate stabilized, with low touch or outsourced management, and they're stabilized or light value add with strong tenants. Now that's clarity. And with this level of clarity, Matt can move fast and ignore the noise and actually enjoy the investing process. And that is exactly what I want for you. No more spreadsheets and guesswork, just focused, confident action, and the right deals for you. Now, I'm gonna show you exactly how to use this buy box in the wild to screen a real deal listing in under 90 seconds. Let's go. All right, so we'll pull up Crexy. I'm gonna go into all types. We'll sort by retail, and I'm not gonna do all industrial. I'll do flex, just flex. Let's get rid of gas stations, grocery stores. Really just want shopping centers, no QSR, no daycare, no convenience stores, no banks, right? So you can see already right off the bat, we've eliminated a lot of our options, which again, kind of sounds counterintuitive, but it's helping you narrow down your search, giving you a lot of clarity. I'm gonna go to the Charlotte MSA. We're gonna find a bunch of properties for sale. Now I'm gonna filter by the price. Minimum is $1 million. He's got some cash that he wants to deploy. Maximum is 1.5. He doesn't have too much cash he wants to deploy. And that brings us to 5 results in the Chattanooga MSA. So look at that. Already we're down to 5 properties that probably check his box. Now, several of these are unpriced. I always find that pretty annoying whenever I'm looking at these. This one says it's industrial. That doesn't really look industrial to me. That's land. This one's unpriced. All right, well, right off the bat, I can tell you, because we have that buy box in place, all 5 of these would be eliminated right off the bat. And that is how I would use this buy box to filter through the deals. I would know immediately, these aren't even worth digging into. Maybe this one right here that's, unpriced is probably worth at least calling on, but if it's unpriced, it's probably not even close to my price range, which means it may not even be worth a call. Now, in a scenario like this, if I was Matt, I wouldn't necessarily start changing my buy box and expanding it to try and fit the market that I'm in. I would sit and think, okay, am I comfortable expanding outside of my comfort zone, or should I just wait and try to dig up an opportunity within the market that I'm already working in that may not necessarily be on Crexy or online or listed somewhere? Maybe I need to start marketing to off-market deals, calling brokers, trying to find what could be available in that market with that buy box. And the great thing about a buy box is that you can just send it to brokers and tell them, hey, this is exactly what I want to buy, and they will remember that. This deal is 12,750 square feet. It's been on the market for 78 days. All right, looking at the flyer, let's see if there's a price on here. Well, this checks several boxes, right? It's 100% occupied, so we don't have to worry about any vacancy here. It's in a decent area, no pricing. So we have to worry about that. I would imagine it's probably not going to be at a cap rate that would check Matt's boxes, but worth digging into. Basically, out of every property that we looked at, we narrowed it down to 5. Out of those 5, we basically narrowed it down to 1. Now it's just time to make a call. Now you can see how powerful it is to have a clear buy box. This isn't just about filtering deals. It's about protecting your time, your capital, and your sanity. Most newer investors waste months chasing shiny opportunities that were probably never right for them in the first place. But when you're working from a defined buy box, every deal becomes a binary decision like what you guys just saw. It either fits or it doesn't. And that's where real momentum for investors starts. If you want to build a portfolio that supports your life and doesn't consume it, you need this kind of clarity from day one. So here's your next step. Define your investment criteria using my Accelerator Buybox Framework. It's a simple tool that has saved me and my students from walking into some very expensive mistakes. And now that you know how to define what you want to buy, check out this video here on what is the easiest property for beginners to own.